station of TFNN.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 9 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's a TGIF, folks. Let's make it a great one. Let's take a look at one of our quotes. Dare to believe. Author unknown. Yesterday's gone, tomorrow's not here. What are you doing right now? Market-wise, let's take a look at it out here. We had the Dow up 44, NASDAQ up 21, S&P's up 8.5. Gold contract flat at $1,293 an ounce. Silver down 13 cents at $19.34 an ounce. Platinum flat at $1,463 an ounce. Copper, $3.16 a pound. Light sweet crude up 62 cents, trading out at 102.12 a barrel. Bonds, the 10-year up 6 ticks at 125.23. The 30-year up, 10-year down 6 ticks at 125.23. The 30-year off 6 ticks at 137.14. 10 and 30-year bond, folks, have gone wide price spread. Accelerated volume this week in a big way. They're going a lot higher. Yields are going a lot lower. King dollar. Up 41 ticks at 80.15. You had the euro down 13 at 136, and the yen is trading flat at 101.53. Our phone number is 877-927-6648. It was called, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? Here we go. You're up $6. You're at 1877. We did 760 million versus 750. So what does that mean? Well, what it means is that you got a bounce coming in the market, which should have happened, flat out. The key is going to be, okay, how far does the bounce go? So if we go to the SPY, we take a look at the SPY, this is what you have. Yesterday, and if you want to see the correlation is pretty intense, folks. In fact, let's go through the full correlation right now. So first off, we've been up at these highs since March 4th. So you're dealing with 3 full months, 3.5 months. Your first high that got generated was on March 7th. That high got generated with 114 million shares when you look at the SPY. Then what happened? We come off that high. So remember the 114. 114, you hit a high, you go downtown with 153. Bottom line right there saying, hey, trend wants to go down. Well, we come back up. We retest that high. The retest on the high was 163 versus the 114. And then what ends up happening, you come back downtown with 142. Then we accelerate up. It starts going up with lighter volume, and then we hit the high. Now, when we hit the 169.70 on the 4th of April, folks, we did that with 169 million shares. That was the day that you hit a high, you came off the high with monster volume, wide price spread, accelerated volume. In that particular case, the SPY was down 3 full points. The S&P was down 30 points. What do? We went from 1890 down to 1810. Huge move down. What you also did, though, is you had 167 million at the lows. So the daily lows, the week of April 11th, and the weekly lows, you had a high volume low. That is why, number one, I felt the high was going to be tested because you had that high volume up there. Bottom line, it takes from April 11th all the way over to May 13th to get the test. Now watch how this test come in. The test come in with 66 million shares versus 169 million. Now you come off that high with monster volume yesterday. You come back down with 154 million. What does that set up? Sets up 2 different areas. It sets up, number one, that the S&P wants to test the 1810, and it also wants to test the 1730. Those areas, the first, the 1810 is the April 11th, and of course the 1730 is the February 5th. Now the small caps have already done it. The NASDAQ NDX 100 has also just about been there. We go take a look at the IWM. So when you take a look at the small caps, this is really wild. On the daily, what we had is this. So your benchmark out here is February 5th. That's 107.27 if we use the IWM. We got down to 107.44. Now, this is where it gets really wild. If you have the Art of Time in the Trade, my book, you know that when you go into a swing, if you have expanded volume, guess what? It wants to break it. If you go into a swing and you have expanded volume and you stop before the swing point, that is when it's the most dangerous, folks. And that's exactly what we did. This is pretty amazing what we did here. So watch this. Because the expansion of volume is not only dramatic, but you stopped right before the 107.27. The swing point that was out there from the 7th, the week of the 5th and the 7th of February, was 102.27. 107.27, rather. We did 315 million shares there. You go all the way back topside, as the S&P did, and you get up to 120. Comes all the way back down, and this week, folks, we did 318 million shares versus the 315 of the benchmark swing. So now what we have, and you closed at 109.57. This is building cause, folks, to blow away the lows inside the Russell 2000 of the February 5th swing point. And that's set up there saying that it wants to run back to the 90 mark. Big move. Huge move. Now, let's go over to the NDX 100. This one's a little tricky here, so watch the NDX 100. We certainly came off the lows with volume. When we take a look at this and we put this on the weekly, what you're going to have is that the weekly, this week we did 221 million shares. Now, we're going into 268. We closed at 87.71. It's like, yeah, man, this is interesting. Because what we didn't hit is the 87.88 area this week. We got to a price point of, oh, no, we did. Awesome. Oh, thank you. Thank you. We did. Okay, so check it out. This is important. This is really important. Okay, the 87.88 area, folks, was the high of the downdraft week of April 11th. We did 348 million. This week we did 221. We got over it. We closed under it. There's your failure. So there's an ABC structure on the way down, too. I was looking at this prior to the open. I'm saying to myself, man, I don't believe we didn't hit that number. But we did. We got to 88.61. It only had to get over 87.88. I was looking at 88 instead of 87. So the bottom line, you had a failure there. Okay, so we did, let's go to the Dow Industrials. Dow Industrials, what we did with the Dow is this. She comes off the high, wide price spread, accelerated volume. She's inside the range. If you look, we'll use the diamonds. We take a look at the diamonds. What you have with the diamonds is this. The diamonds had made a high on Tuesday with 4.1 million. You go downtown with 7.5 million. That's on the daily. On the weekly, what you have is that we tested. This is sweet. This is hard to do, too. So we got to a higher high, 23 million shares versus 38 million, and we closed under the high that was generated in January. So you have a failure. You have a failure, a failure, a failure. What I suspect you're going to see here is this, is that Monday is going to be slow trading day again. You get maybe a little more bump up, and then Tuesday, Wednesday, Thursday, see ya, don't want to be ya. Now, bonds. Bonds have been screaming, folks, that the market's going south. 10-year, you talk about going topside yesterday, went topside in an extraordinary way. We did 2 million contracts. We're at 125.23. We pulled back today with 1 million contracts. This baby is on its way up to the 127 to 128 area. The 30-year is on its way up to 141. And right now, the 30-year, folks, okay, is USM4. US. Oh, so right now, the 30-year, we're trading out at 137.14. You stay right there, folks. Our man Dave White's coming back with us. We're growling and prowling out here. We do appreciate you being with us. We had the Dow finish up 44. NASDAQ up 21. S&P's up 7. We're going to be right back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And welcome all back.
Welcome back, folks. Dave White, Tom O'Brien. Appreciate you growling and prowling with us out here. We had the Dow up 44, Nasdaq up 21, S&P's up 7. And if we do go over, folks, and we take a look at this gold market, okay, so what we had with gold out here this week is this. She comes down today with 103,000 contracts. The correlation yesterday was a big one, and this is what it is. It's very subtle, but what you had is that we actually went into a higher swing at 1307 with 147,000 contracts. That's what gold needs, folks, in order to get up and over the 1328. That's what it's trying to do. When we came down hard on the 15th of April, we went from 1328 down to 1284. Bottom line, she's building cause to get into that draft, that downdraft. If we take a look at the silver market, we have what silver is this. Silver also acted cool. She came down today with 31,000 contracts. I suspect she's also building cause. She went uptown this week with 43,000 contracts. And what you're going to have with silver on the weekly, by the way, is you have a higher high with more volume, which you needed in order to get up into this 2043 area. So if we take a look at the dollar, of course, what the dollar did in a huge way is that the dollar 8 days ago spiked the low, rejected the low, goes topside. The dollar right now is at 80.11, and she wants to run out here to 81.53. So when you take a look at this market, what you're going to see out here, I suspect next week, is that this dollar wants to go higher, the bonds want to go higher, market wants to go lower. We're starting the beginning of the summer. And you're going to get some bounces in here. And in fact, I can tell you, but the way that the market even traded today, and it's not, I'm glad we get a bounce. The one thing that concerns me a little is that on the NYSE, we bang in the 767. It's like, oh man, it should have been lighter than that. When I look at the indices, however, meaning the ETF structures, all the structures acted correctly. Now, if we go over to meaning they bounced on lighter volume, that's what you want to see. The XLF, that bounced on 33 million versus coming downtown with 39 million. The XLE, that is dead meat in an extraordinary way, too. In fact, if you want to see something that's really subtle, the XLE has it, folks. And what it is this. It had made a high, well, the first high that it made was on the 7th of May. That was at 95.25. It did 9.6 million. Then you come off that high with 10.9. You make a test of that high, and this is where it is. You make the test with 4.9 million. You're going into 9.6. You come off of that with 11.4. But today was even better because today you got to a lower low. So the low yesterday was 92.95. Today there's 92.93, and guess what? You have expansion. This one here, though, isn't this wild? When they just have a little lower low, bigger volume, it's like, oh, baby. That's a fund, folks, that is just so happy right now. They got out, and they got out at a decent price, but with a wicked expansion of volume.
Well, I was going to say, during my show today, I was talking about the filings are now starting to flow through.
That's right.
And
that's right.
You're starting to see people that I was surprised that I forget exactly how many shares Loeb had, but it may have been like 13 million shares of Yahoo.
Okay.
Totally out. And you would think that if Alibaba was going to come out, be the monster everybody thought, what's he doing selling Yahoo into this big move, right?
That's right.
So we're starting to see there
he is right here. If you're watching Tiger TV, folks, you're going to see, oh, look who else was getting out. So check this out. Fidelity, folks. Fidelity is one of the, let's see if they're the largest owner, 8.3%. Yeah, Fidelity's the largest owner. That's Fidelity Funds, of course. So they sold 34 million shares. They have 83 million left. Tiger sold them all. So that's Tiger Global, 9 million shares, 0 left. As Dave just said, Third Point sold them all. That was 8 million shares. Also, Maverick Capital sold all of theirs, 2.5 million shares. Yeah, they're collecting. They're hitting the bell. Let's see who's getting sucked in here. So Oz Management. Oz Management bought 10 million shares. They're just coming in. Oh, this is wild. Look at this, SAC.
Yeah.
SAC bought 7.6. Fallon bought 5 million. This is the bias too. This is gonna be wild watching this shake out.
I would just, though, if I was going after somebody, SAC, or if I was looking at Third Point, I'd probably go and follow Third Point more than I would SAC.
Well, SAC's made more than anyone.
Right. But lately, kind of a black eye, right?
He still made more than anyone.
Yeah, okay.
You know, what the difference is that, yeah, you're saying that, okay, in fact, one of the guys went to jail today.
Yeah.
3.5, well, he got 3.5 years. But one had, you know, when you look at the course of the years, there's no one that's made as much money as SAC. Well, I guess Tepper has.
Right.
You know.
So that's, I mean, even Tepper, when I was talking about what they're doing and what they're saying.
Right.
Yesterday, he was saying just how nervous he was about the market.
Yes.
And then there were like 2 or 3 stocks that I saw that he was actually buying over the last few weeks. So there's a little bit of, I'm saying this and doing that.
You know, it's really cool, folks. If you follow, you know, if you listen to CNBC, you know, maybe, probably even Bloomberg, you know, when Tepper has been on, there's no doubt. I remember the first time that he moved the market, and it was a common sense deal, and you know he had it right. There's no two ways about it. He says, "Hey, listen, man, it's the Bernanke put years ago. You just buy everything, period." And he did. He made a fortune. Now, when that was happening, you know, all the financial stations were behind him, like just big time. Yesterday, the financial stations didn't know what to do when he was saying he's nervous. So what ended up happening is that I heard Gary Kaminsky. So Gary Kaminsky's new job, folks, is that he's a wealth advisor. He's the chairman of the wealth advisor for Morgan Stanley. Now, he's out there trying to say, oh, I didn't hear it that way. Of course he didn't hear it that way, because they make their money by accumulating money, folks, okay? That's it, okay? They're never going to say sell, ever, ever, ever. And you had the same thing. Kramer, I mean, one after the other basically was saying, no, he didn't mean that. But then what ended up happening, and this is really good because this is what you need on all stations. There was I forget, one of the women that were on CNBC, she turned around and she says, no, hold it. He didn't say that. I didn't know. She said, I didn't hear that. What I heard is that you better be nervous, okay? And this is not the time to basically be long. You know,
but the interesting thing is that he was buying 3 big tech stocks into at least a week ago.
Well, his that's right, and I suspect, I mean, he has enough money that, by understanding the way it's set up right now, is that he's 60% long, 0 leverage,
right?
So that he can either bring it all the way down and go short, or bring it all the way up.
Okay.
You know, because what you do have, folks, is that when you own positions that are so large, which he runs billions, there's no way that you can get out of the market in a day and 2 days and even a week. Now, he feels that evidently that he can bring that position down or up, you know, very quickly when he's only at a 60%, you know, correlation, you know. So you stay right there, folks. Dave and I are coming right back. We had the Dow Industrials finish up 44, Nasdaq up 21, S&P's up 7, gold was flat, and we're coming into the beginning of summer trading, folks. You can see it out here today. We'll see it a little Monday, but we have a trader's market out here, no doubt. Dave and I are coming right back, folks. You stay right there.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dave White, Tom O'Brien. We appreciate you growling and prowling out here with us. Don't forget, folks, Dave does an outstanding show each and every trading day right here, 2 to 3 Eastern Standard Time. Now, you can get all the programming at TFNN, folks, right on your cell phone. We do 9 hours of live programming every trading day, 9 a.m. to 6 p.m. Right on your cell phone. All you have to do is put TFNN.MOBI. If you'd like to get Dave's newsletter, it's the Tech Insider. It's the bleeding edge of technology. Come over to our website at TFNN. You go into newsletters, investment newsletters. You can test drive the Tech Insider right here, right now. Okay, so I was reading this week, and that's the slide that you have up, that the European court had made some kind of a ruling on Google, right?
Right. They basically said that you have the right to be forgotten, and that was published in English. And that means that if you want something taken off that's been on the internet in the past, that you should be able to go to somebody like Google and say, just take it down.
Now, and is that the top court in Europe?
Yes, there is no appeal.
There is no appeal.
This is law.
So this is going to happen.
This is going to happen. Now,
and is it only going to happen in Europe?
They're saying that if it has to do with anybody in Europe, then it does. Even if your servers are in the U.S., if you are,
that's amazing.
If you're doing business here and the data is going past our national lines,
yes,
it doesn't matter.
Which of course it is.
It
always
right.
is.
So
now that's good. That opens up for all you young folks out here, anyone that actually wants a great business. You know, you've heard those ads about cleaning up reputations on the internet. Yeah. That's going to clean up that's going to open a huge amount of business. I mean, I'm not agreeing on it's going to definitely
the ads we hear are phony here in the States because you can't do that.
Right.
The ones over there, you should be able. The way that the court envisioned this is going to be like a DMCA request. Let's say that.
What's an MCA request?
Let's say that you had different videos on YouTube.
Yes.
And someone said, I own that video that you have on YouTube.
Okay.
There's a part of the website at YouTube where you go, this belongs to me.
Yes.
And they have to take it down.
Okay.
Okay. Now, if you falsely state that, the person can sue you for it.
Okay.
But that mechanism is to get stuff off as quickly as possible that is copyrighted that shouldn't be on things like YouTube.
Okay.
So the court, why they didn't say exactly how it has to be done, said it's going to be like a DMCA request, and you can just say, hey, I want all the stuff wrong. Well, Google basically said, here are the people that asked for stuff to go away from us. Instantly, about 5 minutes after this court case, about 5 pedophiles and a bunch of politicians that had drug convictions.
Right.
So they said, right now, the only people that are bugging us are probably people you would want to know about. So we disagree with the conclusion.
Yes.
And we're going to have to try to figure out how this actually works across national lines and whether or not this this in the United States goes against our free speech rights here, even though our lines go across state border. So
they're going to fight it.
I wonder how they're being equivalent. They're being somewhat equivocal, but the idea would be that even if you had something you didn't like, it could be up there for one day. But what they're saying is that it is going to be ephemeral or lasting one day. If you put something up, someone literally the next day can ask you to take it down just because they don't like it. And to me, it is kind of a very weird, slippery slope of, let's say a politician doesn't like something that was put up.
Oh, of course they're going to take it down.
Right.
They're going to take everything down.
And so I don't know what Google's going to do. Google backed out of China when they went up against this.
Yeah.
So the question is, do they back out of Europe? I don't think so. But are they going to try to make it painful and make it...
It's pretty strange, actually.
It's very strange. Now, if you know what you're doing, you can go around any of these roadblocks.
Right.
Anyway. So the people that are really going to want to know that they did a search in the U.S., this stuff showed up, are still going to be able to get to it.
Sure, right.
Just if your
the majority won't. Right.
Yeah, your IP address comes back to somewhere in Lithuania, no. Right?
Right.
But you'll just use a proxy server, act like you're in the United States, and you'll get the same data for $10 a month to buy a proxy server. So, I don't know, but it seems, like you said, very weird.
Yeah.
It gives you a little icky feeling. Like it's kind of a free speech issue.
Well, what has happened, what seems to be happening right now, folks, is that the fight is on about the internet and bureaucracies, and everyone wants to control the internet.
Right.
And they know, the first fights that took place in the middle of the 90s and the second fights in the beginning of 2000s, folks were fighting, but I don't think the politicians realized how big the internet was going to be. Now they know that that's it. That it is just, it's social, it's real, it's there, and they want control. They want control, man. So the second one we're looking at is Surface Pro and law of versions?
Yes, the law of versions.
What is versions? What is that?
Remember when Windows came out with their first version?
Oh, yeah.
And it was horrible.
Okay.
Okay. One of the laws of technology marketing that the original head of Intel came out with was that products do not fail because they're not good to begin with. It's because they're not fixed fast enough to catch up.
Okay.
Right? So even if your product isn't perfect right off the bat, you just keep revving it.
Yes.
And have new versions until it is. And I didn't really use Windows until about the 3rd version. So I skipped all that part. But the thing is, you just can't stop and say, okay, well, that didn't work, I'm giving up. And almost always when, at least from the head of Intel, the original, not Andy Grove, but David Al, basically came up with this a whole book of theories called Marketing High Technology.
Right, and in that context, Bill Gates, that's what he's known for. They get it out. Get it out, and then we're going to fix it, right?
And then we'll fix it later.
So he beat everyone. That's
right, and eventually. And what's kind of interesting to me is that they will be announcing even a 3rd version of the product that to this point has been mildly successful, would be generous, right? It hasn't been big, but of course, they are trying to go between tablets and notebooks.
Right.
And the question is, that really the market? But they're going
phones in the market. Those pamphlets. What do you call them? No,
phablets.
Phablets.
Right.
That's
cross
the market.
Between the tablet and phablets.
If you folks, when you're out, what I'd love you to do this week, when you're out, just watch how the young people use phones. Phones are the name of the game. That's the computers, man. That's the computers. Tablet sales.
Well, you're going right into it. Business Intelligence had numbers out today showing the tablet market, and they're basically saying that it has hit the highs.
Okay.
And there's 3 reasons why, and it depends on where you are in the world that it does. In the United States, basically every consumer that wanted a tablet bought one by this Christmas.
Right.
Okay? In the Far East and Asia, the phablets, what you were talking about,
yes.
People don't have a phone and a tablet. They just have a big 6-inch Samsung phone, and they're living with that, and
sure.
Almost all the people are that. Now, in business, they've come up, and they're saying that the tablets are not powerful enough as productivity tools to replace PCs in business.
That would make sense, right? Because in the office, we have so many computers in here, it's sick. And, and at home, I have a computer too, and the only time I use a tablet a lot, but if I'm outside or on the couch or something, but, I don't use it for work.
What they did show in the numbers, though, in the last 4 months is that tablet sales have pretty much been the same every single month. So there are people buying new ones,
yes.
But there's the whole idea that the chart shows some hockey stick up.
Right.
It's basically flatlined right here, and it's flatlined for 3 months. And
well, what's interesting about it is that, so I've had, let's see, my sister gave me one of those iPads, I don't know, maybe 3 years ago now. And, I use it for real estate because graphically it's great. You want to hunt houses, maybe some assessor's office and a few other things, but that's about it. So I'll have it forever. I do not crunch numbers on it.
Yeah. So that's part of it. Now, one of the next things we're going to is the sales figures for Samsung's big phablet.
Yes.
Their S5 machine. Now, they've sold 10 million units. And the question is whether or not that's actually good or not. We were actually talking about it in the break.
David said to me that 10 million units. I said, well, is that a lot or not? You don't know because you're always talking millions, right?
It's actually better than the S4, the previous version. But the question is, are you going to get that kind of huge law of large numbers kicking in same way Apple has already? And the answer is that it really looks like we're probably coming in to that law of large numbers on these, what they call super phones, the very expensive ones. Now, a lot of these are $200 with a contract, but if you buy the unlocked version that you can use on any carrier, these things are $700, $800, right? So that gives you an idea of what really the cost of these are. But the numbers are good. They're slightly better.
I like Samsung products, man.
They're very good.
I like them.
They are better than what they had, but the idea of having a new one come out and sell 20 million in the first month, probably maybe that time's gone, right?
You stay right there, folks. Dave White, Tom O'Brien. Appreciate you growling and prowling out with us out here. If you'd like to test drive David's newsletter, Tech Insider, the way you do it, folks, go to TFNN, newsletters, investment newsletters. Test drive it free right now. We'll be right back, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Tom O'Brien.
Welcome back, folks. Dave White, Tom O'Brien. We appreciate you growling and prowling with us out here. And, folks, if you'd like to test my daily newsletter, Market Insights, the way you do it, come over to our website at TFNN. Go into newsletters. Go into trading newsletters. You can test drive Market Insights 1 month, absolutely free. Great time to do it, folks. High volatility, nice moving markets. Right now, we're looking at a slide David put up, bandwidth hogs and cord cutters.
Right. Cord cutters are, of course, those people that are no longer getting cable to their house. All they get is internet and watch Netflix and Amazon
I should
Google
cut
Play.
it. I should cut it. The only thing I watch CNBC in the morning, but I think you can get it on the net now, too.
You can't.
Oh, you can't?
No.
Okay, well.
But you're at the same thing I'm at, which is if I could get CNBC just for the ticker or Bloomberg just for the ticker,
Well,
I would take it.
You know, the difference is you can put the computer right up in the deal anyway, so I should just eat it.
Yeah.
Because it's crazy, because I'm paying $250, and it's like, you got to be kidding me. And all I watch is Breaking Bad and you know, whatever the...
Mad Men?
Oh, I haven't watched Mad Men for a while.
okay.
I like Mad Men, too, though. You know, but as soon as I put the TV on, I fall asleep. So I hardly ever watch TV. So, seriously.
Sandivine, which is a company that does a lot of research, and they are in the internet space.
Okay.
It's done a lot of surveys out here, and they've gone pretty detailed. I went through it today. But the broadband networking company basically does these periodic reports on web usage, and they said the top 15% of streaming video users go through 212 gigabytes of data a month, and that's more than 7 times the average broadband user who uses 29 gigabytes a month. And the whole idea is, yes, you're a cord cutter, but now you're using all this data, and how long is it going to be, especially with the whole net neutrality thing, that they just don't come after you. Now, the question would be, if Netflix goes to $20 a month so they can give $10 to Comcast,
yes,
what does that do to the whole idea of the cart and the horse, and whether or not you'd rather just have cable and everything else? Because right now with the net neutrality thing,
these decisions are big, man.
I wish that everybody already knows what I want. Declare that that those guys are common carriers. Just set up whatever the rate is, and I'll live with that, and have the same thing as the electric board come in and go, you can charge this for that.
Okay.
And then that's it. If you want higher speed at your location, okay, you pay this. And I could understand that. But the whole idea that a Comcast can come in and say, this is going to be faster and this is going to be slower, leads me to the same belief where the IRS decides that they can pick the winners and losers back into anything else.
Now, let me ask you this. The way that Google is wiring cities, right?
Right.
When they're wiring cities like that, you just go right to Google, right? And bypass everyone, right?
Correct. They have their own backbone network, just like Amazon does.
Okay.
And the thing
Thank
is...
God, because when we start talking about net neutrality and all this, Google has enough money to wire all the whole United States.
If they wanted to, right? But it's not a great business to be in for huge profits that they get now.
No, I would say that that's just a cost to make sure their profits continue.
Right. Now, the whole argument is about what they call the last mile, right?
Yes.
And the last mile is Comcast to your door or Fios to your door.
Right.
Right. Now, you've got these giant backbones that Level 3 owns, and they basically are kind of like giant cables that run across the country.
Yes.
Now, what Google and Amazon did was they said, I don't want to be subject to whatever happens on those. So you've got all these dark fibers or unused fibers that you put in back in 2000.
That's right.
We'll buy those from you. So we've got our own major network to cover all of our stuff so no one can slow us down.
Wow.
Okay, and that's why if you go to Amazon or you go to Google, you find out that rarely is anything really slowing you down. Now, Netflix, in their infinite wisdom, went with Amazon to deliver a lot of their content for that reason alone. So what does Comcast do? They stop right in there at the last minute and go, "Oh, stop, slow down.
Right.
We don't want you going so fast." give me, just wet my beak a little bit as you go by me for this last mile to your house.
Right.
And they are acting just like the mob out there going, well,
Sure.
we paid you for this, and it's only the last mile, but we're going to get involved just the same. And that's where...
Because they can.
Because they can.
Right.
And that's the whole argument on net neutrality. But this brings up the argument I know that will be next, which is, okay, how much more are they going to charge you? Are they going to switch to from unlimited to others as they lose customers from their cable
There's
side?
going to be a lot of decisions made here.
And a lot of people probably upset with what those decisions are going to be. So just the data on this, 7 times more data, that...
Can you imagine, folks, these companies are licking their chops.
Yeah.
Because if they picture the amount of data we're all using, but this picture, the attachment, forget the data, the attachment that we have to the internet is huge, okay? They stop that attachment, what would you do?
Well, I think that we've got...
You're going to pay whatever they ask.
There's a couple things coming on. Of course, the U.S. Supreme Court decision on Arrow this summer.
Yes.
If that cuts off a lot of money to the cable companies, that will be one more push for them to go back and try to get that cash from you somewhere else, right?
Okay.
So there's a lot of things going on, a lot of plates in the air right now that are kept spinning, and any one of those falling could mean lower profits for these cable.
Well, see, the thing that's
companies.
interesting, and what was interesting about the Arrow versus the the radio and TV stations is that, and what seems to get lost in this argument, which I don't think they Arrow and did a good job of explaining, is that the way that the broadcast industry is set up, and none of us really understand. Well, no, I understand it because we're in it, okay? But check it out, folks. You own, every person in the United States, okay, owns the FM stations, the AM stations, the TV stations, all of those bandwidths.
Public airwaves.
Yeah, okay? And what has happened over the course of the years, no one knows that that's the public entity, and it didn't cost them anything. Zero. Okay,
well,
and you can buy it off someone else, but the fact of the matter is, it was a zero-sum game. Those public broadcasts and all of that, the bottom line is that what they've managed to do, and this happens in any business over a long period of time, people forget that, oh, the public owned that. Well, it's like the mining business out, north. I mean, in Vegas, you know what I mean? It's like, well, you got all this gold out here. Well, you can get it for nothing. Well, that's public land. Well, we gave it them for nothing because years ago, folks, 200 years ago, you wanted to, do that. Yeah. Now the question is, if you go find $1 billion, well, it is a public land. It's like, oh, really? How does that work?
It is.
So it's pretty wild. And, the bottom line is that this is the quickest hour. I just said I said to Dave a little bit earlier, this is the quickest hour I've ever seen. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it. Take ownership of it. Fly with it. Have a great weekend. Safe weekend. We look forward to speaking right back here on Monday, folks. Thanks, Dave. Have a great one, man.